wide experience of more than 2 decades. She was earlier with Banu Shekhar sir. Now she was with Deloitte for more than 10 years. She holds a bachelor degree of commerce and also uh, Institute of Chartered Accountant CA plus caste accountant. She was engaged with a large of clients engaged in IT services and manufacturing and automobiles. She has a vast experience in handling the assessment. So today we are going to have a very interactive session on depreciation because lot of issues she has been experienced in this depreciation cases. So let us welcome Sumati madam. We are ready to hear from you, and also along with her junior Mr. Sendil Kumar, who is a manager in global taxation. He is also going to give you lot of inputs. Any question you can ask to him. We usually call Sendil as Wikipedia because whatever the issues, if you ask, he will refer many case laws from various acts, income tax, FEMA, even labor law, like that he will interact with everything and give you the best and correct answer. So we can make use of him. Thank you. I welcome you both.
Thank you, Pechi. Good evening, friends. Today I'll be discussing about the depreciation. Actually speaking, if you see the section, it looks very simple, but there are various controversies which we are facing practically. So basically, I'll be go through what is the concept of depreciation. Then we can have a discussion on the practical issues that we face with the department, and then we can have some judicial precedents. So what is depreciation? Depreciation is nothing but the reduction in the value of the fixed asset due to normal wear and tear. Companies Act and Income Tax Act both allow for depreciation. So depreciation is a statutory allowance. If we see in Income Tax Act, it is a mandatory allowance that is to be given by the assessing officer, even if the assessee has not claimed the same in the return of income. So now basically what are the conditions for claiming a depreciation? First condition is ownership. So the asset has to be owned either wholly or partly by the assessee. Even fractional ownership is recognized for the claim of depreciation. Suppose there is a co-ownership, then in the proportion of the ownership in the asset, they are eligible to claim the depreciation. There are certain exceptions for this ownership concept. One is when a tenant takes a premises on lease for business purposes. So once they take it on lease for business purposes and do some extension or renovation or any improvement in the leased premises, then that expense has to be capitalized and they will be allowed depreciation. This was brought in because earlier there were controversies where the assessee said the property in which I have incurred expenses is not my own property, so there is no capital asset. So they brought in this explanation. Then second is the exception to the ownership is beneficial ownership. Practically sometimes the possession will be with the assessee and they would be using it for business purposes. But there can be a situation where the title deed is not yet transferred to the assessee. So in this case, the beneficial ownership is the main point, and the person who is enjoying the property can claim depreciation. Then next is leasing transaction. This I think we can have we have a separate slide and we can discuss there. Next is the use of the asset. It should be used for the purpose of business, and the usage can be, it's not restricted to active. Pardon? Yeah, once I finish the concept, then questions, then yeah, yeah. Oh, okay, okay. Yes, yes. No issues. the entire expenses. No, after the introduction of the explanation. Mm. But this amendment is with the effect from 1498. This explanation has been brought in. So that decision relates to a period prior to that. Mm. 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 Yeah. Mm. Yeah. Yeah, under the leasing concept, when we come to this lease, in fact in the operating lease and finance lease, they say when the lessor has the right to take it back at any time, and when he has the right to inspect the property at any time, then they say that only the lessor will be eligible for depreciation. Yeah. Mm. Yeah. Yes. Premises. Yes. No, the land portion is on lease, but the entire building is my own construction, and I'm using it for my business. So it will create a lot of controversies if we take that position also.
Supreme Court ruling where the courts have held that you are taking the property on a long term, you are going to enjoy the
Lease.
property for a long period, and you are going to pay only the rent at a nominal, very very small insignificant amount. So whatever expenditure you are incurring, so you can claim it as an expenditure after for a long time. But department are disputing that you need to capitalize. Obviously department dispute everything. Yes. They are giving, okay, since you can claim only 10% depreciation for that.
Yes. Correct. There the building is capitalized by the lessee only. Normally. Correct. Correct. The building will be with the lessee. Sorry. On it. So next is the use of the asset. It's not restricted only to the actual use, even the passive use or potential use has to be considered. Suppose practically when we have a standby machine which will be used only when the original machine is broke down, or in case of a generator when it is used during power cut. Okay, in Tamil Nadu that may not be the case because we'll be using every day now. But in those cases, it is not actually used during the year, but still it is eligible for depreciation. Then the asset has to be used during the relevant year. If the asset falls into the block and the block is available, the asset is available in the block, or the value of the value of the asset is there in the block, then depreciation can be claimed. The only exception is when the factory building is closed for the whole year. In such a cases, the assessee may not be eligible for depreciation. The fourth condition is asset must fall under the eligible class of asset, that is tangible asset, or which consists of building, machinery, plant or furniture, and intangible asset which consists of know-how, patents, copyrights, license, franchises or any other similar business or commercial rights. Yes. Yes, because even the passive use are correct. Correct. Additions?
Suppose additions are made during the previous year.
Okay.
And it is not at all used.
Additions, the concept is only when it is put to use, you are supposed to add it. That is the main crux of the section.
Should I have to add to the block of assets and remain without any depreciation, or should I not even enter in the block of assets?
You cannot even enter in the block of asset, because only when it is put to use as per Income Tax Act, it is an addition to the asset.
You are saying that let's not add it to the block itself.
Yes.
So what will happen in the following year?
Okay, in the following year only you are going to use it.
So should I have to use it for 180 days in the following year also, or not required?
No, in the following year, initially you will be adding it.
That's right.
Correct.
The subsequent year, I will put the asset to use for 180 days.
Okay.
So will I get half depreciation or full depreciation?
Half depreciation, because the 50% is even for the period when it is put.
Is it possible for me to take a stand? Allow her to complete, sir. Allow her to complete. Clear the doubt after. See, by the time you come to 7:30, not even by the time. Afterwards also, no problem.
So asset must fall. Yeah. Asset must fall within the eligible class of asset, that is tangible or intangible. Sorry. So other features are depreciation. As I already told you, depreciation is a mandatory allowance and it has to be given by the officer even if you are not claiming in the return of income. Then the concept of block of assets. Up to 31/3/1988, the depreciation as per Income Tax Act was based on the individual assets. From 1/4/1988, the concept of block of asset was introduced. Another block of asset, you are supposed to first classify the asset as to tangible or intangible, and within the tangible whether it is going to be building, machinery or plant, and then again based on the rates of depreciation that is available, you are supposed to create the block, and based on the block your depreciation is allowed. And in the case of for income tax purposes, the depreciation is allowed only when the asset is put to use, and not when the asset is from the date of acquisition or when the asset is ready to use. If you see under the Companies Act, the asset once it is ready to use, they add it to in the gross block. However, for Income Tax Act, since it is put to use, practically we have to see whether there is going to be any timing difference between the date of ready to use and put to use. If there is going to be a difference and which is significant, like more than or less than 180 days, or it falls within 2 different years, then care has to be taken. Depreciation is allowed on the written down value method. One exception is depreciation on generation and distribution. Undertaking on generation and distribution of power is allowed depreciation under straight line method. And as we all know, if the asset is put to use for less than 180 days, then the depreciation is allowed only at the 50% of the amount calculated. Now coming to what is the actual cost. Actual cost is the cost that we pay to get the asset, to which we should add any transportation, loading, unloading, or to all the expenses incurred to make the asset for the condition to be to which it is ready to put to use. So this will include even the installation charges, and if there is any term loan taken for the purpose of asset, then till the date when the asset is put to use, the interest portion has also to be capitalized. Then if the asset is imported, then the forex loss or gain has realized forex loss or gain under section 43A, we have to capitalize that amount also. There are other various peculiar situations where the section 43 refers to. So under this section, if the asset is already used for scientific research, so we would have already claimed 100% of that amount under 35(1)(4), or we could have claimed weighted deduction under 35(2)(ab). So in that case, when this asset is used for business, the cost will be nil. In case where the asset is acquired by way of gift or inheritance, then the actual cost to the previous owner will be considered. Where an assessee sells the asset and repurchases it, then the cost will be considered considering the depreciation or the price at which the asset is reacquired. Whichever is less will be considered as the cost of the asset. Another instance is the building which has been used by the assessee for personal purposes. If it is converted into business purposes, then notionally we have to calculate the depreciation till the date on which the asset is converted, and then the WDV value on that date will be considered as the cost of the asset. And in the other cases, that is in case of holding asset acquired from or to holding company and subsidiary company, amalgamation, demerger, etc., the WDV value of the transferor will be considered as the cost of the transferee company. And as I already told you, interest paid for acquisition of fixed asset till the asset is put to use will have to be added to the cost of the asset. Any excise duty service tax for which credit is eligible, the assessee is eligible for credit, then the same has to be reduced from the cost. Mod-VAT credit claimed. Yeah, subsidy has to be reduced. Any grant or subsidy which goes to reduce the cost of the, it's particularly linked with the asset, then that has to be reduced from the cost to arrive at the cost. Then in case of an asset acquired by a non-resident, then here also notionally the depreciation has to be calculated and only the net WDV will be considered as cost. And asset eligible for 35 AD, here also the cost will be considered as nil. Up to last year, that is assessment year 17-18, we were eligible for high rate of depreciation. Like if an assessee puts a solar plant, they were eligible for 80% of depreciation. Plus with the additional depreciation, they were eligible for 100%. Now, in the current financial year, the maximum rate of depreciation is only 40%. So wherever we had 60 or 80 or 100, now it is reduced to 40%. Now coming to the practical issues that we face day to day. So one of the major issue is goodwill. So there are various decisions because goodwill is not defined in the Act. So there are decisions which try to bring it into the commercial or business commercial rights. So if you see, there are various decisions where they allowed the depreciation, say goodwill on depreciation on goodwill, saying that it falls within the definition of commercial right. But there was dispute between the assessees and the tax department. Finally, Supreme Court in the case of Smith Securities came out with a decision saying that goodwill is an intangible asset. Primarily the earlier question was whether goodwill is an intangible asset and whether depreciation is allowable. So Supreme Court said in the case of Smith Securities that depreciation is an intangible asset. This case relates to an amalgamation. In the scheme of amalgamation, the consideration paid was higher than the net value of the assets taken over. So the assessee claimed it as goodwill and claimed depreciation. So all along it travelled up to Supreme Court, and then Supreme Court said goodwill is an intangible asset. It is in the nature of business or commercial right and eligible for depreciation. So based on this, various other courts and tribunals have also given subsequent decisions, even in the context of slum sales, that depreciation, goodwill is eligible for depreciation. But one catch point in this Smith Securities was, in this decision, Supreme Court particularly mentioned that on the valuation of goodwill, since this was not there raised by either the revenue or the assessee, it didn't comment on the valuation of goodwill. So with this Supreme Court decision, the issue has not come to an end. Recently, if you see the Bangalore Tribunal in the case of United Breweries, in this case, if you see the facts of the case was the company merged 3 of its subsidiaries and accounted goodwill, being the difference between the consideration and fair value. The assessing officer disallowed the depreciation on the ground that there is no proper valuation for the goodwill. So the case, the CIT upheld the decision of the AO, and then case went to ITAT. So now ITAT took over, cited the 5th proviso to section 32(1)(2), which says in case of an amalgamated company, the depreciation will be considered as if the amalgamation has not taken place. That is, it will be the same value and the same consideration. So it also referred to explanation 3 of 43(1), and then it held in this case the assessee is not eligible for depreciation on goodwill except to the extent which, if the amalgamating company had, then the assessee would be eligible only to that extent. So the concept of excess consideration over net value asset was not considered. So again, this has opened the issue for the tax authorities, and recently in the concluded assessment also, huge value of depreciation was disallowed for some of our clients. Then coming to another interesting decision. This is the decision of the Pune Tribunal in the case of Cosmos Cooperative Bank. In this case, actually the scheme of amalgamation was in the nature of merger. The bank merged various other subsidiary banks, and then it accounted on the basis of the pooling of interest method, not on the purchase method. So there was no goodwill recorded in the books. The loss, that is the excess of the consideration paid over the net asset which was there, the assessee claimed it as a revenue loss. So the assessing officer disallowed the claim, and further the CIT appeals also upheld the order of the AO. Before the tribunal, the assessee dropped that ground and raised an alternative claim, saying that since it has acquired these banks, it has the client base has increased, and there are operational branch as new money market has resulted in business advantage. So this will qualify as business or commercial rights. On this ground, the tribunal also agreed with the view of the assessee, and relying on the Delhi High Court decision in the case of Arriva and the ITAT Hyderabad in the case of SKS Microfinance, the tribunal allowed the issue in favor of the assessee. So this is a case where the goodwill is not even recorded in the books. So this is another, with certain other controversies, if you take this is going to be another controversy between the assessees and tax authorities. So anything to discuss on this? So next is coming to non-compete fee. This is another issue which has been there between the assessees and the tax authorities. So non-compete fee is normally paid by the transferee of a business to the transferor, not to compete in the similar, not to participate in similar business, or not to directly or indirectly solicit clients and various other things. So there was controversy. Assessees were claiming the non-compete fee as revenue expenditure. This non-compete fee is normally for a period of 3 years or 5 years or 7 years. So the tax authority said, no, you have an enduring benefit, so you cannot claim it as a revenue expenditure. But there are contrary decisions. If you see in the Madras High Court in the case of Carborundum Universal, it held that the non-compete fee is paid by the assessee for the purpose of the business of the assessee, and allowed the non-compete fee as revenue expenditure. But there are other contradicting decisions also. If you see in the case of Madras High Court in the case of Pentasoft, and Karnataka High Court in the case of Ingersoll, there they said the non-compete fee is, they said that it is in the nature of business right, and then they allowed depreciation on the same. If you see the Madras High Court, and there's against case law by the Delhi High Court in the case of Sharp Business, both were rendered similarly in the same year. In fact, it was both were rendered in the 2012. In Madras High Court, the High Court held that it is the business right and allowed depreciation, whereas in Sharp Business, the High Court said in case of intangible assets, that is other rights and all, the right of the assessee right is against the whole world. Whereas in case of a non-compete fee, it is the right is against a particular person. So here they said in this case the assessee had claimed it as revenue expenditure, but they didn't allow either as revenue expenditure or as a capital expenditure, and they didn't allow depreciation. They just treated it as capital expenditure. So based on this, currently we are facing issues with the tax officers, because they say Supreme Court has not come out with any decision. So still we have to disallow it to keep the issue alive. Yes. Yeah. Pardon? Yes. Yes. Assessee had written off it as revenue expenditure in these cases. In Sharp business, it was some amount of 3 crores or something. They claimed it as revenue. So the first contention was the assessee said no. When the authority said that it cannot be revenue, then they asked for depreciation. At least treat it as intangible. But that was also rejected. Since there is no Supreme Court decisions here, even having a jurisdictional High Court decision, still the AOs are disallowing because they fear of the C&AG audit. They will raise a query and all those things.
Practically now situation is arising, the entrepreneur who has received the non-compete fee, after 5 or 6 year period, he is starting the same business and he is competing with that other party, but till the income tax dispute is continuing, whether it is a capital expenditure or a revenue expenditure. So there is no benefit if department is disputing that it is a capital expenditure. So the right way is they have to allow only it as a revenue expenditure. No, only for 4 or 5 years only the benefit is there. After that, the same competitor is again starting the same business and he is competing with the person to whom he has paid the non-compete fee. So only the income tax dispute is continuing, but actual real business purpose is not served.
Now another issue which I think everyone will be facing this tax authorities now, normally we say if it is a software, we just add it to computer software and claim 60%. Now they are asking whether it is a software or license or what it is, and then they are treating it as intangible. They say if it is a license, it is a license and I cannot allow you 60%. That is one of the contrary views that is going on between the assessees and tax authorities. But however, we have some favorable ruling in this regard. The another issue is this UPS, printers, scanners, which are connected to the computers. In fact, without the computer, the printers and scanners cannot work. But still, the tax department is taking a view that it is only a plant and machinery, not connected with computers, and they say that the depreciation is allowable only at 15%. But now we have a favorable ruling by the Chennai Tribunal, but an against ruling by the Madras High Court. So this again is an open issue that is going on.
Other high courts, Delhi and all is in a favorable ruling. Chennai only is against.
No, actually in one of the cases they have discussed if it cannot function without the computer, then it should be taken as computer only. See, if it can function separately, that UPS, I think you can use it even for other things. So if it is, if it is intrinsically related to the computer. Yes. Pardon? Scanner. Yeah. For UPS. Department is already taking 15% only. So we are arguing that.
But C8 appeal, in few cases they are allowing at 60%.
But if you see in here, irrespective, they are taking it as 15%. Whether it is going to be department fully now till see, even if we have a jurisdictional favorable case or whatever it is, till Supreme Court comes. If you see in the case of Goodwill, even after Supreme Court decision, still they are contesting on different angles. No, yearly license, they say it is allowable as a revenue expenditure. If it's a yearly renewable license. Yes. Yeah. Actually, no, when the tax officers requested for breakup, and then we asked the client for each and every one, that time we find that it's not, some licenses it's not yearly also. It is, they say no, there's no condition of next year to renewal. Yeah, that is loaded with the computer. Correct. No, when it is along with the machinery, there I think you can capitalize. Where there are certain cases where after the computer is purchased and subsequently in a year or two they get some licenses, and practically if you see, they say it is not a yearly license. So there the dispute comes. If it's a yearly license, even the tax authorities have agreed. They say you just break it. If it's yearly, then leave it. I'll take it into revenue. So next is additional depreciation. In a way, this has been solved by the Finance Act 2015, but still there are issues. If you see the proviso to section under section 32(1)(2)(a), where additional depreciation is allowed at 20%. So on this issue, there was a controversy if the asset is put to use in the second half, that is less than 180 days. So if it is put for use less than 180 days, whether the balance 50% will be allowed in the next year. There were contradictory decisions. Department was disallowing the extra 10% which we claimed in the subsequent year. They said that additional depreciation is for a particular year and you cannot take it to the next year. Then we had lot of favorable decisions by the Delhi Tribunal, Cochin Tribunal and Kolkata Tribunal. However, there was a negative ruling by the Chennai Tribunal in the case of Brakes India. But subsequent to Brakes India, we have two favorable decisions. One is the automotive coaches by the same Chennai Tribunal, and then recently now we got the Madras High Court. So now the act is already amended with the effect from 1/4/2016, where they said that the balance 50% will be allowed in the next year. So then now the controversy between by the tax department is whether this amendment is retrospective or prospective. They say no, it is only since the section amendment itself says it is only from 1/4/2016, I will not allow. But still we have jurisdictional, even the Madras High Court decision in our favor. We have to anyhow fight it out at the next level. The assessing officer will not take a decision on this. So the leasing transactions. So here also there are a lot of controversies whether it is an operating lease or finance lease. In the case of an operating lease, the risk and rewards does not get transferred to lessee. So here the lessee is eligible for claiming the lease rental and the lessor will be claiming the depreciation. However, in the case of finance lease, the risk and rewards are transferred to the lessee. So the controversy now is whether depreciation has to be claimed by the lessor or by the lessee. This is the controversy that is going on between the tax authorities and the assessees. If you see accounting standard 19 says in certain cases the lease will be treated only as finance lease transaction. In such a case, the lessee will capitalize the asset in its books of account. After introduction of AS 19, the CBDT came out with a circular saying that the capitalization of assets acquired under the finance lease by the lessees will not have any bearing for the allowance of depreciation. And then they said only the lessor will be eligible. But they put a catch in word that it will be determined based on the terms of the contract between the lessor and the lessee. So there are various decisions where contradictory decisions. In some cases, they say that in case of finance lease, only the lessee will be eligible for depreciation. In certain cases, they said the lessor will be eligible for depreciation. If you see in the case of the Mumbai Tribunal, in the case of JM Shares, here the lessee, based on the terms of the contract, they found that all the risk was borne by the lessee and all taxes was paid by the lessee in respect of the vehicles, and hence they said that lessee will be eligible for depreciation. In fact, though there was this CBDT circular which says that lessor will be eligible for depreciation. Then in the case of Housing Development Finance Corporation also, based on the agreement, they said the lessee will be eligible for depreciation. However, in the case of special bench, in the case of IndusInd Bank, the terms of the contract made it that the lessee is one second. Here also the lessee's claim was allowed and the lessor's claim was disallowed, because the terms of the contract showed that the lessee is the owner of the asset. So, if you see the Supreme Court in the case of ICDS came out with the conditions which has to be fulfilled, whether the lessor can claim the depreciation. So, here the conditions are the lessor should be the exclusive owner of the asset at all point of time. If the lessee committed a default, the lessor should have the power to repossess the asset. At the conclusion of the lease period, the lessee should be obliged to return the asset to the lessor. The lessor should have the right to inspect the property at any time. In such a cases, the lessor will be the full owner of the asset and he will be eligible for depreciation. If there is a contrary, then the lessee will be eligible for depreciation. No, in the hire purchase, immediately the
owner only will
he
be eligible
become
to
the
claim
owner.
depreciation.
But still the ownership is with the purchaser once in the case of hire purchase. In the finance lease, only at the end I will get the ownership. If at all, at some nominal rate I will buy like... yes. It's a little thin line of differentiation between hire purchase and finance lease. Yes. Mm. Mm. But that 99 years normally comes for land where nothing is there for us. Huh. Yes. User of the land.
In Chennai also it has happened in Woodlands case.
This is another controversy which has been put to end by the Finance Act. So earlier what happened is, in case of charitable institutions, they used to the cost of the asset, they used to show it as application of income. Then again the depreciation portion, they will again claim it as deduction, as application. But there were rulings that also supported this view of the assessees, where they said, okay, depreciation is an allowable deduction for the trust. Then this has come to an end by the insertion of by the amendment. So from assessment year 15-16, the charitable trust can claim only the cost of the asset as a application. Depreciation is not allowed. Pardon? Yeah, it is with effect from 1/4/2015. So the same thing we can say it is prospective and not retrospective, and based on the rulings we can make a claim. If you see, there are various rulings which says the charitable institution is eligible for depreciation. But it is a very aggressive stance. See, there's no cash flow at all, but still I want to show it as a deduction. Huh. No, what happens is, when you invest in fixed assets itself, in the first year itself you are showing it as application of income. Only when there is fully we are showing it as application of income, then how can we again claim depreciation? Though there are various case laws, but how can we claim a depreciation again? So now coming to the unabsorbed depreciation. Section 32(2) deals with the unabsorbed depreciation. If the depreciation is not if there is any depreciation, the profits of the business is less or there's no profits, then the depreciation will be carried forward to the next year, and as per this section it will be added to the depreciation of that year and claimed as depreciation, claimed as deduction. However, it is subject to section 72(2) and 72(3). So 72(2) only says first when you have a business loss and unabsorbed depreciation, the priority will be you have to set off the business loss. So this unabsorbed depreciation can be set off against any income other than salary, whether it is income from house property or capital gains or profits or other sources. And further, under 139(3), if you say the loss will be available for carry forward only if the return is filed before the due date of filing the return of income. However, that section covers only 72, 73, etc. So this 32, that is unabsorbed depreciation, it automatically becomes a depreciation of the next year. So the provisions of section 139(3) will not apply in this case. So even if you don't file a return or you file a belated return, still you will be eligible for setting off of the unabsorbed depreciation. Here, yeah. Cost or only the depreciation. Okay, yeah. Pardon? Carry forward.
Yes, it is permissible.
allowed.
It is permissible.
So this is another, if you see there are, we have in fact practically faced a problem in this unabsorbed depreciation. If you see up to financial year 95-96, the depreciation was allowed to be carried forward indefinitely and it can be set off against any source of income. In between, there for a period of I think 5 years, there was a restriction. That is financial year 96 to 97 to 2000-2001. They brought in a restriction wherein the depreciation was allowed only for 8 years to be carried forward, and it can be set off only against a business income when it is carried forward. Then again in financial year 2001-2, they said no, it is again carried forward to the indefinitely. So what has happened is when the first amendment came in 1996, the CBDT also brought in a circular saying that whatever depreciation you have as on 1/4/1996, that is for the subsequent, everything will be considered as the depreciation as on 1/4/1996, and it will be eligible for 8 years to be carried forward and set off. Again in 2001 there was an amendment which brought in wherein they said that the restriction is removed. But the department, what they said is, they took this 8 years period and whatever depreciation we had up to 31/3/2001, they said only for 8 years you are allowed, even when we were setting it off after that 2001-2 subsequent period. So this was in fact one of the cases, the special bench decision of the Mumbai Tribunal in the case of times guarantee. They said that unabsorbed depreciation till that period, that is 31/3/2001, has to be will fall under that second limb, and the restriction is applicable. So this brought in suddenly very old issues came up, and recently we had in one of our clients' case also a reopening of the assessment, and we had big amount of disallowed, which in fact they had disallowed the unabsorbed depreciation of 92-93 in the year 2006-07. So they said that more than this is set off for a period beyond 8 years and it cannot be allowed. After this times guarantee decision, there was a Gujarat High Court decision in the case of General Motors. There it was a writ filed by the assessee on the reassessment, and there the Gujarat High Court said that the intermittent period, that is the period of limitation, because of the amendment in 2001, that intermittent period is taken away. So this is again supported by the Chennai Tribunal in the case of KMC Specialty. Here also they said the interim period, the eligibility of unabsorbed depreciation to be carried forward was limited for a period of 8 years. but the old position, that unabsorbed depreciation, becomes the current depreciation under 32(2), and therefore it has reverted back, so it is eligible for set off without any limitation. So what is the impact of ICDS? Government grants, it's already there in the section, but still under ICDS 7, they say that any grants received for in respect of any specific asset, it has to be reduced from the value of in the block to compute the cost of asset. And if it is a totally, it is not for a specific asset but generally for all assets, then proportionately we are supposed to reduce it from the cost of the asset. Then next case is trial run. So under ICDS 5, first they said up to the date of trial run it has to be capitalized, and then they just kept quiet. There was no provision of what is the status between the trial run and when the asset is put to use. Now in the recent clarification they have brought it that the expenses incurred between the trial run and the commercial production should also be capitalized. Earlier there are various decisions on the claim of depreciation. See, if you see once the asset is put to use is a concept. So there were judgments that said once it is a trial run is conducted, then from the date of trial run you are eligible for depreciation. Now because of this ICDS, which says after the trial run till the date the asset is commercially put to use, commercial production has to be capitalized. Now the status of those decision, it's a question mark. What will happen? Whether we can claim it from the trial run of from the date of trial run, or we can claim it only after commercial production is a question. So other issues in case of discarded assets. So there is contrary rulings. The other Delhi High Court has allowed it in favor of the assessees, whereas Karnataka High Court has said no. Trial run, as I said, so long there were decisions saying from the date of trial run it can be considered as put to use, so you will be eligible for depreciation. But after this ICDS where it says from the trial run to commercial production should also be capitalized, so whether we need to claim the depreciation from the date of trial run or from the date of capitalization. In case of factory lockout, that is if the full year the factory doesn't function, then the depreciation cannot be claimed. Yeah, but there it will be used, no? For some period we will use it. Yeah, here it says where the full year you are not able to use it. So there is no restriction when you can claim it.
This part of the year asset has been put to use, that one, and that too first year it satisfies the usage test. Subsequently it is a seasonal industry, so it will have only seasonal operation, but depreciation has to be provided for the obsolescence and the wear and tear.
Now another one interesting question is when there is a TP adjustment. Actually fixed asset is a capital item, so it will not be concerned in our computation if there is a TP adjustment. However, there in the Delhi tribunal case, in the case of Honda motorcycles, they said when there is a TP adjustment in the cost of the fixed asset, you have to alter the depreciation claim accordingly. So that is another issue. Any other practical issues if we can discuss, it will be good. I have one practical issue. Yeah. Yeah. Actually that has to be reduced from the cost. Yes, yes. I have faced one practical issue. I think I can get a solution here. One of the assessees, they went for the assessment. So it is a very big company, and the assessing officer called for the copy of additions to fixed assets, invoices. So the assessee was able to give 90% of the invoices, but 10% they were not able to give. I don't know what transpired between the assessee and the officer. The officer disallowed the depreciation on the 10% of the assets for which invoices was not produced. So what has happened is, in between, this assessee has also shifted their locations, and they have lost the 10% invoices for the 10% of asset. So the issue is now before the CIT appeals. So what the assessee was able to give is, because of the SAP environment, they were able to give the purchase order, the ledger extract, that is payment, everything of the supplier. But and then the CIT, so we made a additional evidence, we filed additional evidence before the CIT appeals. Pardon? Plant and machinery.
Integrated plant and
Plant
machinery,
and
where portion of the asset has been, the fixed assets bills have been, they are lost due to rain. Yes, that
That
additional
is what
documents
we
also.
gave as a additional evidence, giving the purchase order, and it's a very old, by the time the appeal has come up, it's a very old issue, and people have changed in the company, and huh. Okay, okay. Correct. That return, okay, send that return will be
Yes, all those things were furnished.
furnished. We
Every-
furnished the that supplier's ledger, purchase order, and fixed asset. But still,
Alone several crores of rupees.
it's relating to very old years. Now it is more than 10 years. So that is a practical issue we are facing. As sir said, we can try to get the SENVAT returns. But we were not able to get it from the supplier. That is the problem. If that is the case, then it is easier. So with any. Huh. Yes. Actually, what they have a good habit of keeping everything in as a set. So everything has gone. From the purchase order to pro forma invoice, everything has gone. So any other practical issues? Okay. Okay. So that should be a good evidence. It's a government evidence, and so they cannot reject. Correct. Mm. Okay. Thank you, sir. So, any other issues?
Any questions ready to answer anything? Or whatever, any depreciation issues which you have faced during assessment, or whatever, if you are able to throw open, I think it will be a good learning for us.
Pardon?
New industries.
Mm.
Okay. No, it is in connection with setting up of a mega plant in industry. So it is now subsidy, that amendment also been brought into the Finance Act. So they said it is only treated as a revenue receipt. It is not incurred in connection with the, but they are calculating based on the percentage of the investment made in plant and machinery. But it is it has been provided in order to encourage the entrepreneurial, as well as in order to provide employment opportunity into that backward stage. So they said it is in connection with the promoter subsidy only. So they said previously it was regarded as a capital receipt, not chargeable to tax. But subsequently now they are treated as revenue receipt only. It will be offered to tax.
Many companies in SIPCOT, when they got that subsidy from the government, they treated as capital reserve, and they credited the capital reserve, but department, they are saying it is a revenue. But now they brought in a clarification, so from now on I think that controversy will get ended. That is a practical issue. Yes. That is a risk which we have to take. See, even as auditors, we don't know whether the assessee has used that asset. In a big plant, even we don't know. That is the risk we are also taking when we are signing the tax audit report.
But especially for big industries and all, now officers are simultaneously verifying through Google whether when the plant has been commenced, like mega plant, more than 50 crores or 100 crores size of investment has taken place. And they are readily they are finding out on which date the commencement has taken place. Substantial completion. So everything is coming in public domain. So actually they are. Yes. I agree. Practical challenges.
Yeah, as per the current thing, if you're going to pay it in cash, then you will not be eligible for depreciation. Yes. So in fact, if you see in the slide, we have mentioned anything below about 10,000, definitely you're going to lose the depreciation.
Unfortunately, the amount they kept as 10,000 is no way in today's scenario is good.
It's very, very less, very nominal.
Yeah. Yes, we have to, and it will not be considered as part of the
You
asset
cannot
plan.
capitalize it. So once you don't,
Yeah, provided with the proper documentary support.
no, this is for normal only. Yes. No, that cannot be the case. It is not that there they cannot make the disallowance. There they cannot make the disallowance.
It's only under 32 only that comes.
This has come under 32, under normal. So MAT they cannot do anything. Subsidy? Okay.
In the department, they are trying to argue that you need to reduce from the cost of the asset and I'll allow only lower depreciation. But if the intention of subsidy is to promote the entrepreneurs and also to promote the employment opportunity in the state, it is a mega subsidy, or depending upon the size of the investment is government is willing to give, means previously it has been regarded as a capital receipt not chargeable to tax. So all companies, they want to try to say that, so it should not be reduced from the cost of the asset, so depreciation should not be denied. But now recently the amendment has come in, so it should be chargeable to tax as a revenue receipt. Only if subsidy has been given in relation to that, based on only for the plant and machinery, if they are giving subsidy, means then it has to be reduced from the cost of the asset.
That is, even if it goes into the bank against the loan, still we have to treat it separately, either as a revenue or as or for the asset.
Whatever you are explaining, this situation dispute is going on in Chennai.
So anything else? Yeah, thank you. Thanks for patience hearing.
Thank you, madam, and thank you, sir, for your presentation. On behalf of ICA, I am handing over this memento to the madam. Thank you, sir.